Hello traders, welcome back to the channel. This is Janoy with Trading the Charts Pro, and guys, in this video we're going to be breaking down all the indices to see where is the market going to go in this upcoming week. All right, so stay tuned, let's jump into it. All right, guys, we're going to start off with the ES Futures E-Mini. All right, guys, this week has been nothing, but selling, so hopefully you took some profits and you are looking or waiting for this market to continue coming down lower. And then from there, we will find many opportunities to get back in and start playing it again. All right, but now let's look at the charts and see where are those levels that we're going to actually be able to pick up some of these stocks cheap. And if you are trading futures, at what level are you no longer be looking to short this E-mini futures? All right, so when we look at it, guys, the market has already broken all of the critical levels, right? We were in an uptrend and the uptrending support level has been broken. The 10 and the 20 EMA has already broken. Price fell extremely hard on Friday. After Thursday we already broke down. We got bought back up a little bit, which was a good sign, but you can see on Friday we opened lower and then price continued to sell off to the downside. So when we put all of that together, guys, this is just looking like a nice bear flag right here. So I'm anticipating that come Sunday when futures open again, I'm looking to see the 50 level potentially break, and we're looking to see price move back down into the retracement level. Why do I feel that is going to happen? Because the market has already switched momentum. When we look at the MACD is into the negative, the histogram is into the negative. The MACD and the MACD indicator is showing us in the short term that the momentum is to the downside. All right, we already crossed over, which is significant. And when we check the volume, we're getting increasing volume on this sell-off. So this is actually signs or confirming indicators that price action is going to go lower. All right, so when we look at it, if we just take a quick second, pull out the Fibonacci retracement, take it from the breakout level here, and then we take it all the way back up to the top where price runs. So what we're looking to measure is, okay, price broke out here. This was a nice move to the upside. So we want to see, okay, if the market just retrace, if this is just a retracement, what are the retracement levels that we're looking at? All right, so right here we're into the 50% level, and as far as retracement, the 60% or 61.8% is going to be just a little bit down more, which is around 3,659. So can the market come back down just a little bit more, breaking the 50 and pull down some more, and then bounce from here, come back up just a little bit before we actually pull down and go lower? I do feel 100% confident that this market is actually going to pull all the way down and test the retracement level, or not the retracement, but test the old resistance. Why? Because since this market has broken out, we haven't got back down to this level as yet. So if we get a nice pullback down to this level, I feel like that's really healthy, and then from there we can try to potentially bounce and try to make another move, at least back to the upside. So if you're swinging a couple stocks, we want to be cautious because I do see more downside in the short term. Let's look at the Nasdaq, see what the Nasdaq is telling us. Tech has been resilient because tech has been leading the market for a good period of time. And when we look at what's going on, tech is still a lot stronger in some sense than the S&P 500, which tech has always been a beast. All right, so when we look at this, I'm still seeing where there's a potential for tech to pull back down to the 50, and when it gets to the 50, that's where I'm looking to see a bounce off the 50, and then we will go from there. Right, I do feel like tech is not going to get as much as a crazy sell-off in terms of the index as the S&P 500 is going to. All right, based on what we're currently seeing in the charts. So let's look at the Dow Jones, see what the Dow futures is actually telling us, guys. When we look at the the YAMH futures, it's not looking good. We already broke the 50, right? And now I'm also seeing where there is a bear flag pattern set up right here. This is a sign that's showing me that the market is still looking to pull back down all the way into this level. Right, if we add the MACD indicator on here, see what it's telling us. Now the MACD and the histogram is even showing stronger that this is going deep, so we have to keep an eye on this. This is still bearish. If you're short the market, I would still be short, and I'll still continue to trail these short down at least until the market gets back, or the Dow YM gets back to the 28,780 level. I don't see anything right this second that's going to just give us a boost to go back up to the upside. We're in full correction mode, and I am confident that we're coming back down to this level right here, which is going to be good if you already took some profit and you're in all cash waiting for some of these lower risk opportunity as these stocks pull back. Remember, we've been running long for a pretty good period of time, couple months. So this is nothing new that we're actually getting, a short-term correction. So don't panic, just adjust your positions. If you're long 10,000, at this point I'll be, cutting the position down a little bit, so as the market pulls back, I'm able to buy in back a little bit lower. Or if you're long, let's go ahead and sell some out of the money call options and collect those premiums as the market sells off. All right, so that's what I'm looking to do. That's what I'm already doing right now. Let's take a look at the VIX and see what we're seeing, guys. On Thursday, Friday, we did not get a continuation on the VIX, which is a good sign, but the VIX is still high, guys. It doesn't take a lot for us to just get one more day and the VIX breaking out of the 40-43 level. So let's keep a very strong or sharp eye on the VIX, because it has already broken out of the support, which means that any overreaction can cause this VIX to spike up, and overreaction means everybody start to run for the door and start the panic selling, which will actually end up driving the market lower and lower. Another thing that I want to bring to the forefront of your mind is that we're coming up on the anniversary of the corona crash, and the market has memories. People have they remember when it happened, and when that time is coming back around, people are going to start become cautious, and there may be some reaction around that period of time. So is this the reaction leading up to the anniversary of the COVID crash? Well, we have to see how it plays out from here. Guys, I want to take a quick second to talk about a couple of our swings that we basically had going, and see what are we looking at. Guys, I really still like CRM, even though initially when I talked about it, price was up here, yes, and the price ended up selling off. I still like this position, still holding this position, and I'm looking to see, can we break out above the 50? And if we get a breakout above the 50, then this is a confirmation of a bull flag pattern, which I'm seeing setting up right now. The only thing that's holding this trade back right now is the fact that price cannot close above the 50 EMA. As soon as we're able to do that, or if we're able to do that, then I'm looking to see this next leg up into the 249 level, right? So I'm still long CRM. I still like CRM. Also wanted to bring, you know, a great stock to your attention, and this is Apple. You know, Apple had a phenomenal earnings, but you can see after earnings the stock sold off. I do believe that that is because we had a very nice run from 130, you know, into the 143s. That's around what, 13-14 points move, and that was the pre-run COVID. That was the pre-earnings run, and then, you know, we had the earnings and people start taking profit. What that actually means is that everybody was buying ahead, knowing that Apple was gonna beat earnings. So when the earnings actually come out, they're like, okay, we already knew this, and here we are. We started to take some profit. But if you took some profit, like myself, what are we seeing? We're seeing that, you know, typically this stock likes to bounce around the 50 EMA. So here we are, you know, question mark, are we looking to bounce at the 50 again? If so, that means that we will, you know, continue moving to the upside. So this is one that I want to bring to your attention for this upcoming week. The second one that I want to bring to your attention for this upcoming week is Facebook. Facebook, you know, they had pretty good earnings, but again, you know, the stock sold off on earnings. Why? Because pre-earnings, the stock came down to 145, which was this move here, and then pre-earnings, the stock run from 145 all the way up to almost 290, 285. Guys, that's, you know, a quick $40-$50 move, $40 move. That was significant. Here we are getting caught up into this sell-off, which is the overall market is selling off. So I am watching, does, you know, Facebook come back down, top the 140, top the 240s, and then we get a bounce and we start to head back up into the resistance. What resistance am I talking about? Well, here it is, guys. Look at this level. We can head into as far as 290, and we can also head all the way up to 300. But the only way I would like this or take a new position on this is if we come down to the 240s, 245, and we get a bounce and a confirmation, then that is a good sign that, hey, this is a place to get back in on Facebook, looking to ride it up. If Facebook break the 245 level and start to head lower, I'm no longer interested in this. I'm not going to be touching it. All right. One more stock I think I wanted to mention, or I think I did mention this one already. Well, guys, we end up having to take profit on workday because we see price, you know, almost popped up, you run up, and then we started to get a reversal. So that was a sign to close this out and take a quick profit, given that, you know, we entered roughly into right around this area, 228. We got 10 points to the upside before we got out. But what are we seeing? The stock is back down near the support again. So we have to watch this, see, do we get a nice bounce out of here and try to take us higher? How higher? Well, we got to be cautious, extremely cautious right here into the 239 levels, because we see that's where we're selling off. But you never know, if the market does bounce, this may end up pushing this thing potentially back up into the 245 level. We also got to check, see when earnings is, because that will completely offset the plays. All right, so guys, if you did find some value inside this video, I want to say thank you for watching, and I look forward to seeing you on the next video. All right, thank you.